Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today, we're diving into the recent developments in the Toronto real estate market, and there's a lot to unpack. Toronto home sales have climbed for the third straight month, offering a glimmer of hope for prospective buyers.
That's right, Steve. The Toronto Regional Real Estate Board reported that more than 5,000 homes were sold last month on a seasonally adjusted basis. This is an 8.1% increase in June, and it's exciting to see this kind of activity.
It is indeed, Janine. What's driving this surge is the abundance of properties on the market. Active listings have climbed month over month, up 34% compared to a year ago. Buyers are gaining leverage over sellers due to this increased inventory.
And that leverage is reflected in the home values, which have been declining. The home price index fell for the seventh straight month in June. Across the Toronto region, the index was $978,200, which is a 5.6% decrease from last year.
Exactly. And in the city of Toronto, the index is down 4.4%. While the York region saw an even steeper decline of 8.5% year over year. This gives buyers a bit more negotiating power as they explore their options.
But it's not just about numbers, Steve. With more homes available, families have more choices to find a home that truly fits their needs and lifestyle. It's about finding that perfect place to call home, not just an investment.
That's a valid point, Janine. However, it's worth noting that despite the rise in sales, the volume of transactions is still about 30% below the 10-year average. This suggests that some buyers are still on the sidelines, possibly waiting for further changes in borrowing costs or economic conditions to improve.
True. And Jason Mercer from the Toronto Regional Real Estate Board mentioned that sales could pick up if borrowing costs decrease further or if there's a resolution to the U.S. trade war. These factors could significantly boost consumer confidence.
Absolutely. The most popular mortgage type, the 5-year fixed rate, is just under 4% now, which is down from nearly 5% a year ago. But it's still higher than during the pandemic's peak. A firm trade deal with the United States could help stabilize the economy and further encourage buyers.
It's a complex situation, but I feel optimistic. With more inventory and potentially lower mortgage rates on the horizon, there are opportunities for those looking to enter the market or make a move. It's about staying informed and prepared.
Despite the initial optimism for a market recovery, the Greater Toronto Area saw a 2.4% decrease in home sales in June compared to the previous year, with 6,243 properties changing hands. This decline, reported by the Toronto Regional Real Estate Board, highlights ongoing challenges in the market.
It's true, Steve. But if we look at the month-to-month data, sales actually increased by 8.1% from May on a seasonally adjusted basis. This suggests that the market is showing some signs of recovery despite the year-over-year drop.
That month-to-month increase is promising, Janine. However, the overall cooling in the GTA's real estate activity this year can largely be attributed to economic uncertainties, particularly those stemming from the Canada-US trade tensions.
Yes, and Viango from Big City Realty mentioned that many potential buyers are still hesitant due to these uncertainties. The market's unpredictability has made it tough for real estate agents and buyers alike.
The numbers reflect that sentiment. In the city of Toronto, sales increased by 3.5%, but in the rest of the GTA, they fell by 5.6%. This pattern indicates a mixed response across different areas within the region.
And it's not just sales numbers that are affected. The average selling price dropped by 5.4%, bringing it to $1,101,691. The composite benchmark price, which represents the typical home, also saw a 5.5% decrease.
On the brighter side, there was a 7.7% increase in new property listings. This gives buyers more options and the ability to negotiate discounts off asking prices, as noted by TAREB President Alekia Berry-Sproul.
Absolutely, more inventory can empower buyers. And with borrowing costs lower than last year, home ownership is becoming more attainable for many households. It's about finding the right opportunity in the current market.
Jason Mercer from TRREB also pointed out that a firm trade deal with the United States and further interest rate cuts could improve consumer confidence and provide support for selling prices. The Bank of Canada's upcoming rate decision on July 30th will be crucial.
It's an important time for prospective buyers to stay informed. While the market has its ups and downs, having the right information can help make the best decisions possible.
Let's delve into the current state of mortgage rates in Canada, which seem to be in a bit of a holding pattern. Robert McLister notes that there hasn't been much movement in the rates recently, which is leaving both lenders and borrowers in a bit of suspense.
That's interesting, Steve. It seems like everyone is waiting with bated breath for some kind of resolution on the U.S. trade deal, which could potentially shake things up. Until then, mortgage rates are just hovering in this ho-hum environment.
Exactly. And this stagnation is making it tough for borrowers looking for the best deal. The big six banks aren't exactly eager to drop their rates either. They're holding their cards close to their chest, much like a chef guarding their secret recipe.
But there is a silver lining for those who are savvy and patient. If you're a borrower who can get financing from multiple sources or have existing business with a lender, you might find that they'll offer you a better rate than advertised, possibly even below 4%.
That's true, Janine. However, it's important to not get too caught up in the low rates without considering the terms and conditions of the mortgage. Sometimes the fine print can cost you more than the lower rate saves you, especially when it comes to prepayments and penalties.
Absolutely, Steve. A quick chat with an experienced broker can be invaluable in these situations. They can help you navigate the complexities of mortgage terms and ensure that you're not just looking at the rate, but also at the overall cost of the mortgage.
And for those looking for a good deal, it's wise to check not only with national lenders, but also with regional brokers and credit unions. Sometimes, these smaller entities offer more competitive rates and can be more flexible in negotiations.
Yes, and it's all about creating a competitive environment. When lenders realize that you're informed and comparing rates, they're more likely to offer you a better deal. It's like a game of chess, and knowing your next move can make all the difference.
Robert McLister emphasizes that any default-insured fixed rate starting with a 3 is exceptional in today's market, or 4.19% or less for an uninsured rate. It's crucial for borrowers to be aware of these benchmarks when negotiating their mortgage terms.
I agree, Steve. Being informed is key. The mortgage landscape might seem static now, but with the right approach and timely decisions, borrowers can still secure favorable terms that align with their financial goals.
The Financial Services Regulatory Authority of Ontario, also known as FSRA, has initiated enforcement action against 2,748,204 Ontario Inc., which operates as Flex Home Loans, and an individual named Michael Yauscher. This development raises significant concerns regarding the company's compliance with Ontario's mortgage regulations.
That's right, Steve. FSRA has alleged that Flex Home Loans and Yauscher have failed to adhere to the Mortgage Brokerages, Lenders, and Administrators Act, 2006. Specifically, they are accused of operating as a mortgage lender without the necessary licensing or exemption, which is a serious contravention of Section 4, Subsection 2 of the Act.
Yes, Janine, and the allegations don't stop there. Flex Home Loans is also accused of including false or misleading information in their renewal applications, violating Sections 45.1 and 45.2 of the Act. This kind of behavior can undermine trust in the mortgage industry and harm investors.
Absolutely, Steve. It's critical that companies operating in this space maintain integrity and honesty. FSRA's proposal to issue a compliance order is a strong move to ensure that Flex Home Loans and Yosher cease their current operations until they can comply with the law.
The compliance order would require Flex Home Loans to inform their investors of the license revocation. They must also help investors either find a new mortgage administrator or manage their investments on their own. These steps are vital to protect investors' interests and maintain stability in the market.
And FSRA is also looking to revoke the mortgage administrator license of Flex Home Loans 31 days after the compliance order takes effect. Plus, they're proposing an administrative penalty of $10,000 against Yosher. This kind of enforcement helps set a standard for compliance across the industry.
Flex Home Loans and Yosher have requested a hearing before the Financial Services Tribunal to challenge this proposal. It's their right to seek a fair hearing, but the situation underscores the importance of regulatory oversight in maintaining the integrity of the mortgage market.
I agree, Steve. The outcome of this case could have implications for how mortgage brokers and lenders conduct their business in Ontario. It's a reminder that transparency and adherence to legal standards are non-negotiable in this industry.
As we wrap up today's episode, let's take a closer look at the Toronto Regional Real Estate Board's recent insights. They've emphasized that further interest rate cuts and a firm trade deal with the United States could significantly boost home sales in the Greater Toronto Area.
That's an interesting point, Steve. The potential for interest rate cuts could really open up opportunities for more families to enter the housing market. It would make borrowing more affordable and help ease the financial pressure on current homeowners looking to refinance.
Absolutely, Janine. Lower interest rates can indeed have a positive impact on the market by increasing buyer confidence and making financing more accessible. However, it's important to consider the broader economic implications of rate cuts, such as inflation and currency fluctuations.
True, Steve. But let's not overlook the importance of a trade deal with the United States. A stable trade relationship can enhance economic stability and consumer confidence, which in turn can drive up home sales as people feel more secure in their financial futures.
Agreed, Janine. A trade deal could alleviate some of the uncertainties that have been looming over the market. It's all about creating a conducive environment for growth, where both buyers and sellers feel comfortable making significant financial decisions.
Exactly. And at the heart of it, it's about finding balance. If both interest rates and trade conditions align favorably, we could see a healthier real estate market with increased activity and more opportunities for everyone involved.
That's the goal, Janine. It's crucial for stakeholders to stay informed and be prepared to act when the conditions are right. Keeping an eye on these developments will help them make strategic decisions that align with their long-term goals.
And as always, having a reliable mortgage broker or real estate advisor can be invaluable. They can provide guidance tailored to individual circumstances, ensuring that clients are making the best choices for their futures.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.